Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Happy Monday. This is the morning show here on Stock Market TV. Spencer, JC, Steve, Alfonso with you on this chilly morning, at least in the New York City metro area. It's like 54 degrees right now. It's going to be like 88 later on this week, but it's cold right now. New guest alert. New guest on today's show, Brien Lundin, not Brien Lund. Brien Lund will be on Wednesday, but today's Brien Lundin, editor of the Gold newsletter. He was with the guys down in New Orleans a couple weeks ago. He'll be on the show at 9 o'clock today. I assume they'll talk gold. I don't know. I guess we'll find out. Jason Purrs will stop by a little bit as well. Good morning, chat. Riley, Phil, Purr, Sambo, Mary, Charles, Colin, Rick, Yoj. Who am I missing? Anyone? I'm sure I'm missing some people. For some reason, my chat likes to not show every comment. All right. Well, we're good. Okay, cool. Are we good? You're good. I'm good. The guys are good. Is Steve's camera working? I hope so. Let's start the show. Drop me a like if you please. Here we go.
Oh, good morning. Good morning.
Hey guys,
live from the Jersey Shore. How is it?
Man.
Is it cold by you? It's cold by
Dude,
me.
it's freaking awesome, man. It really is so awesome. This is the time to be here, you know. Once you come around August, it's amateur hour. That's when Spencer starts coming. You know, this is not right.
You're not call
Spencer's right. It's too cold. It's just objectively too cold, sir.
Sir, do not call me an amateur on the Jersey Shore.
He grew up here.
Please.
The state of New Jersey, underrated.
This newbie. He's a beach newbie.
Dude, I'm in, dude. I didn't used to come down here back in the day because, like, you know, this is like for families and stuff like that, and I didn't have a family.
The
last thing I wanted to do
was you grew up in Miami.
No, I know, but but I left Miami when I was 18.
You still wouldn't have known what it was living in New York.
Well, we went to other places. We went to places like with partying and like not with like families, because like the good thing here is that there's just a bunch of annoying little kids everywhere, so it's great because my annoying little kids fit right in.
They blend in.
You know, it's like my kids are annoying, but so are yours. So cheers. You know.
That's it. That's it.
So what'd you do this weekend besides wine shopping?
Man, they got a great wine shop here. I got to tell you. I sent Strazza pictures.
It comes out. It comes out at okay.
Dude, Fred's is an institution around here.
Okay.
Dude, people just walk around wearing the T-shirt of the liquor store, like it's like literally an institution.
All right, cool.
Hurricanes everywhere. Hurricanes, flags, Miami Hurricanes. You know, University of Miami is a big Jersey school. A lot of Jersey people go to. Look at Spencer's face. Spencer's like, yeah, I don't think so. Yeah, Spencer.
No, it's a thing.
It's a
really?
thing.
That's
definitely.
All right.
Definitely a thing. My sister went to University of Miami. She's like, all my friends are from New Jersey. So you go down to the Jersey Shore, and then you got like Hurricanes flags everywhere, you know?
Okay.
Dude, I got to get a crib out here. I already decided. Dude, $4 million for a single family just to get on the island. That's the smallest house, $4 million. Damn, son.
Just imagine if you want waterfront, too.
Just think about how much Bitcoin you can own with that instead.
Yeah.
No, waterfront, you're talking 15. 12 to 15.
Sure. Yeah. All right, let's date some markets.
All right, ladies and gentlemen, good to be back. We've got the Dow futures down a hundy. It's 0.25% to the downside, 42,200 for the Dow. S&P's down 0.33%, 21 handles, just under 5,900. NASDAQ 100 futures leading the way, down 0.5%, down 113. That's 21,260 for the NASDAQ 100. 30-year bond futures down 0.33%, 112.5. You got crude oil absolutely ripping up 4.5% today, 63.5. What a ripper in crude oil. Commodities all day today. Copper up 4.5%. That's $4.90 for copper. gold up 2% and change, 33.90. You got silver up 2% and change, 33.75, with the VIX up this morning, 1965 for that VIX. Over in funny money land, you got Bitcoin down this morning. Bitcoin down 1,500 points, 104,200, 104,200 for Bitcoin. Ethereum just under 2,500, down almost 2% on the day. You got Solana 154, down 2.3%, with the total crypto market cap, Mr. Spencer Israel, 3.2 trillion, 3.2 trillion. I mean, it's kind of an obvious answer, but what stands out from this morning's future, sir?
So this is the move we've been waiting for in crude oil. It reminds me a bit of the move we had in copper. Was it last Monday? Oh, the Friday before last week. We had a little false start from copper out of this coil. If copper, crude, and I'm going to throw silver in that basket too. If the three of these can stick these moves, I think that's huge. And there's a big trend, big leg up from all three of these commodities, and it's very tradable.
Dude,
been waiting for this.
Platinum sucks.
Yeah, I know.
Platinum, didn't Platinum get the memo that commodities are ripping today? By the way, what a great day to have Brien Lundin in.
Yeah, really.
I mean, seriously, guys, if you don't know Brien Lundin, get your shit together, first of all. Second of all,
yeah,
there's nobody in the world that knows more gold investors, gold mining companies, gold CEOs. Like, there's nobody in the world that is disconnected in the gold market. I know there's like some popular names, like plenty of gold charlatans out there for sure that might be a little bit more popular just because they're clowns. But this guy's the real deal, man. Real deal.
JC, do you think we should expect the relationship, the positive correlation between crude oil and dollars to remain the same? Because this morning is different and interesting in that way, is it not?
Yeah, I mean, listen, you make a great point. The dollar and crude oil have certainly been trading together, and you're not seeing that today. So, again, one morning doesn't make a trend. That relationship has been pretty consistent for quite some time. I've been in the camp with Steve that relationship is unsustainable. Dollars and oil moving together so tightly. At some point, something's got to give. Did it give this morning? Is that what's happening?
Yeah. Is this the beginning of the end of that correlation is kind of what I'm thinking. And I really like seeing all these moves in synchrony, right? Look at gold this morning, look at silver, look at copper, look at crude, like you said. Look at the heating oil, okay? Look at the gasoline.
And then the gasolina. I'm in the gasolina. Right?
No, look
That's
at
how it goes. That's what Spencer breaks it down to with the Jersey girls.
That's right.
And even better, in equities markets, we got some big levels here in the oil and gas stocks and in some copper stocks. If you zoom out on something like a Southern Copper Co., you got this massive level here in the 80s, 90s, right? It's acted as resistance and now support over the course of the past several years. You have something like Freeport still trading in a massive range, but if you drop a VWAP from the September pivot highs, comes in right above the current price. Looks like actually we're going to be gapping up above that level here this morning. So I think there's some very tradable vehicles. And with XLE or even XOP, you have like these big toppy looking situations that are appearing to now be failed tops. And you can really pick your spots and get some nice entries in these ETFs as well.
When you look at the short interest, which I like to do, just got updates on the short interest on Tuesday of last week. They dropped those updates every 2 weeks because we have to like pretend that we're like in the the Stone Age and we're like cavemen, that we can't just have the data in real time like adults. Like we have to pretend that this blockchain technology doesn't exist. Pay no attention to the blockchain technology behind the curtain. Pay no attention to this. We're going to pretend that we're using like, chisels and rocks, and it's a 2-week delay on data that's 2 weeks delayed. So it's like, I mean, Jesus Christ, guys, get your shit together, man. It's 2025.
Does not appear to be changing anytime soon.
Wait, it's a 2-week delay on a 2-week delay? I don't think I knew that.
It's like crazy. It's insane.
I thought it was I thought there's one 2-week delay.
Every 2 weeks we get the data from 2 weeks ago.
Either I knew that or I forgot that. All right.
No, it's a 2-week delay.
Yeah,
the day it comes, it's 2 weeks old.
Okay.
But it's been this way forever. and it's going to continue to be this way. We've talked about that.
And now here's the good news. Here's the good news about that. At the end of the day, at the end of the day, it doesn't matter so much whether there's 21% short interest or 25% short interest or 31 or 32. Is there a lot of short interest or not? So we got that going for us. Like, do we need the exact details? No.
That's right.
But
I agree.
I complain.
It's nice to see the trend. It is nice to see the trend.
It's less of a complaint and more like just like, fuck you, government. You suck. Like, do better. It's more like that than it is like a complaint. Like, it doesn't really hurt us that much. But still, right? Can we all agree, like, this is stupid?
Maybe if Elon Musk wasn't busy being stuck in a K-hole, he would have solved these things while he was doing Doge. But it's too late now.
What is a K-hole? Is that like an A-hole, but like worse?
It's good that you don't know what that is, JC. It is
The West Coast kids are doing it. We didn't have these kinds of drugs when I was growing up. They're crazy.
Definitely not.
I grew up in Miami. There were a lot of drugs, man. You stay away from the drugs, you stay away from the hookers, you're gonna be all right. I'm telling you. It's the best advice I can offer. Those two things. World-class advice. I mean, I've seen a lot of good men go down with one, usually both of those things. Can we get back to the energy? Because we're just kind of like flying over this energy thing. Can you throw up slide 2, please?
Yeah, let's spend some time on this. Dude, look at like something like Chevron, all coiled up at the lower bounds. Like you take these shots now of crude oil scooping and scoring, right?
The oil services companies and the explorers and producers have some of the highest short interest of all of the sectors out there. Regional banks up there as well, right? So here we are. By the way, Spencer, I like what you did here with the videos there down at the bottom. Well done, sir. Well done. And
I didn't. That was an accident. Sorry.
Wow.
I don't need to do that.
New things.
Wait a minute. Hold on. I kind of like that. Why'd you take that out? That was good.
Fine. I've done it before.
Yeah, but sometimes there's better time. Like, this is perfect because all the attention is up at the top.
Okay.
What's going on at the bottom doesn't matter, so you can put our mugs there. I like what you did there. You don't have to tell everybody that you did it by accident, Spencer. Take the props and shut your mouth, right?
Wait, hold on, JC. We're being informed by the chat that the move in crude oil is due to Ukraine. Does it change the move in crude oil? Does it matter to you?
Dude, you know how many times times I've seen these schmendricks tell me that the reason prices are moving is because some explosion in Sudan or turmoil in the Middle East or Russia's doing something crazy. Yeah, Russians are crazy. There's always turmoil in the Middle East. Like, yeah, so what? Oh, yeah, but turmoil in the Middle East? I can't believe it. Oh, the Russians are doing something shady? Oh, my God, I can't believe it. Oh, the Chinese are lying? Oh, what a shocker. Yeah, that's the world we live in.
A lot of good China stuff, too, coming in hot with the China this morning.
Dude, these communists are out of control, man. Let me tell you something. This is the only sector in the United States of America that is still below the great financial crisis highs. Speaking of unsustainable. Right?
Yeah, I like it. I agree.
Completely unsustainable there, energy. We got some monthly candlesticks. Here we are 17 minutes into the show, and we have not talked about monthly candlesticks, not even once. Here's one. But how about this one here? Mr. Strazza, throw up the Momentum Factor ETF. Wow, look at this bad boy right here. New all-time highs for Momentum. Some of the top holdings include JP Morgan Chase, Broadcom, Tesla, NVIDIA, Visa, Meta, Palantir, Netflix. It does not appear to be defensive rotation, Strazza. Would you like to take the other side of that?
I think it's an expansion in participation.
I thought this was a deeply flawed ETF.
It is. It's terrible.
Yeah. I'm surprised to see that.
I mean, deeply flawed is a strong word. They tell you how they're going to do it.
It's really bad.
What's wrong? What? Tell me why it's so flawed.
Any given time, Procter & Gamble or Johnson & Johnson could be the top holdings in this fund.
Well, right now the top holding is Walmart.
There you go.
So Walmart's not. So Walmart is not allowed to have momentum.
For me, momentum should come with an above-average beta, and they're just stuffing stocks in there with below.
Okay, but that would be a high beta ETF, not a momentum factor.
They're very similar, my friend.
Well, obviously they're not.
No, the way they're doing it, Todd Stone has come on here before and just talked about how the way that they're picking these holdings is not really the momentum factor. They're just using a basic rate of change. That's fine.
Yeah, and
also,
who has more assets under management, BlackRock or Todd Stone?
Okay, it's
By the way,
also
I'm not hating on Todd Stone. I love Todd
No one's
Stone.
upset about it, but you. It is what it is. It's a shitty fund.
well, it's all
Okay, so
it's also
is this a bearish development or a bullish development for
whatever.
U.S. equity investors?
I agree. It's bullish.
Okay, enough. No further questions, Your Honor.
Well, I was going to say it's also the nature of the rebalancing of this specific fund. They do it quarterly, I think, and that's just probably not enough rebalancing.
I'll
but
get excited when SPHB looks more like MTUM.
SPHB.
Yeah.
That's the S&P 500 High Beta Index Fund.
Yeah, that one's a little more fun.
So Strazza is much more interested in high beta than he is high momentum. Keep in mind that S&P 500 high beta ETF is equally weighted. This momentum fund very much cap weighted. The top 10 holdings represent over 40% of the weighting. So the high beta index is going to really give you a much better broad look at high beta stocks. Mm-hmm. Which, by the way, I look at that index once a week at least for a decade, right? Like forever. So I'm not like saying that that's not useful. What I'm saying is that the momentum fund just hit new all-time monthly closing highs, highest close ever. Do we normally see all-time highs in downtrends, Mr. Strazza?
No, sir.
I do not. No. And then what about speaking of high beta? What about that NASDAQ 100? Throw that up there.
Nice.
What do we think about that?
Is
this ETF improperly managed as well?
This is a great one.
Oh, this one's okay.
This is cool. Yeah.
All right.
I've got no notes.
No notes on this one.
Well, it's a tech ETF with Pepsi in it, but other than that, it's great.
Well, 50% of the weighting here is in technology, and technology putting up double-digit returns in the second quarter. Best performing sector of Q2. If you could throw up slide 6 there, please, Spencer. You could throw up technology leading the way this bear market, right? So this is epic bear market we're seeing here in stocks, right? And recession's coming any day now. Technology up almost 12% for the quarter. By the way, rounding out the top 3, industrials and consumer discretionaries, rounding out the top 3. Strazza, are these normally the sectors that do so well during the bear markets historically? Because, I keep being told that's what we're in.
No, the leadership off of the April lows. You have it from April 1st here, so it's close to the April lows.
Yeah, because it's quarterly returns,
Sure. The leadership off the April lows has been very offensive.
Yeah. And why don't we zoom out, so people, JC, you're cherry picking the April lows, bro. So here we are.
I didn't say that.
No, not you. People, you people, not you specifically, but people are like, JC. So here are the year-to-date numbers, and Utes leading the way here. And if it was just Utes and staples leading the way, I would be the first one to argue that would be defensive rotation. However, rounding out the top 5 is industrials, financials, and communications. Furthest thing from defensive. These year-to-date returns, particularly when you add 20+% returns in areas like Brazil and Germany and all over Asia. Does this scream bear market to you there?
Yeah, this is defensive.
Industrials, financials, communications, rounding out the top 5, that's defensive.
Discretionaries on the bottom.
I was going to say, what's on the bottom, JC?
I mean, this is just as textbook defensive of a tape as it gets, and that's okay.
Wow, industrials are defensive now.
Once again, this time
European financials making all-time highs every day, also defensive.
Yeah, this would be a defensive leaderboard.
JC, Steve's, you know what he's doing. He's not making a commentary on like the market. He's making a commentary on this chart, right? Because if you zoom in, it looks way different, right?
Yeah.
If you zoom into what?
If you zoom in on the last couple of months, it looks way different.
Yeah, and I'm much more focused on this time.
Hey, look at this.
Yeah,
hey.
Yeah, that's defensive. When staples is up top and discretionary is down low and down whatever 5%. Defensive for sure.
Look at the international momentum factor.
You let us have this one, Spencer.
What?
I did not know that was the next chart. Truthfully, I didn't. But yes, good job.
Yeah, this one sucks too.
Yeah, man. I see a huge base. IMTM. Look at that bad boy.
It is nice.
IMTM. What do you think is in it?
Very nice. Probably.
What do you think is in it?
AstraZeneca, SAP.
No.
Well,
SAP is the
ASML.
largest component. SAP is the largest component. Then you got the old Royal Bank of Canada, You got the Commonwealth Bank of Australia. Who knew there was such a thing? You got Roche Holdings. You got Hitachi. You know what's awesome about Hitachi? You know, when you go to like old Cuban grandmothers' houses, right? The rice maker, they call them Hitachis, right? They don't call them rice makers. They just call them by the name of the brand, Hitachis.
Oh, that's cool.
Oh, está Hitachi. You know, like you hear the grandmothers yelling, looking for the Hitachi. And then, you know, remember in Spanish, you don't pronounce the H. So it's Hitachi. Silly Cubans. A lot of rice in the Cuban.
They make good rice over there, you know?
They make good rice. I mean, my grandmother, I mean, man, she kills it, you know? So Hitachi is in there. Deutsche Telekom. What a stock that thing has turned out to be.
DPEGY?
Yeah. Deutsche Telekom. Spotify is in there.
Oh, that's a good one.
You got Rolls Royce, not the car maker.
But see, that's what you would expect in a fund like this. It should be full of Spotifys. The problem with Europe or anything overseas is there just aren't many Spotifys. You don't have many momentum stocks.
No, that's right.
Oh, is Kenny coming on? I'm going to do Kenny's room tomorrow.
Kenny is
no Kenny.
in the
That's why I'm doing his room.
in the
right?
Bermuda Triangle. Yes,
That's right. That's right. I hope he's okay.
I'm pretty sure he's going to be just fine.
I used to love watching Bermuda Triangle like documentaries on YouTube when YouTube first came out. I was like really into it when I was younger. I was always like researching the Bermuda Triangle. It just scared me so much that planes could just disappear.
Remember that show Tailspin?
No.
You remember Tailspin? Anybody remember Tailspin?
No.
It was like this like big bear. He was a pilot. He was always like saving the day.
Oh the cartoon?
Yeah, the cartoon.
Oh yeah.
No.
Yeah.
Yes. Wow, that's a blast from the past.
He would get lost in the Bermuda Triangle, but he was the only pilot that was able to like maneuver through the Bermuda Triangle.
I think I had a Tailspin poster.
The chat wants to know if you wear Speedos when at the Jersey Shore.
Do I wear Speedos? I wear the banana hammock. I'm more of a banana hammock kind of guy.
Nice.
I've had a couple of warnings, but I still have a couple of warnings left before I'm kicked out forever.
Nice.
Yeah. Dude, not for nothing. Speaking of banana hammocks, when I was down in Fort Lauderdale, bro, with wifey a few months ago, like they're out there in full force right there, you know. I didn't realize they got down like that up in Fort Lauderdale. I thought it was more of a South Beach, Key West thing, but no.
I believe it.
These guys are jacked, dude. These guys are freaking like roided up, jacked with these little, you know, banana hammocks. Like, it's not okay. It's not okay.
No, I know what you're talking about.
It's not okay. That's no good.
It's funny though.
All right, before we bring in Brien Lundin, you know, any other majors? Can we talk about France? Shout out France. All-time highs.
France, yep, France deserves it. Yep.
Listen, people think that it's just
This is so interesting.
People think that it's just good wine and good food and Parisian assholes, but no, there is more to France. There's more to France.
This is interesting because in the U.S., as the chart you just showed, consumer discretionary was at the bottom year to date. But France, like 3 of their top 5 holdings are discretionary, right? It's
you got Louis Vuitton.
Yeah, and then Hermes, and then what's the other one? There's one more. Crap.
L'Oreal.
Maybe. Yeah, possibly. So it's a discretionary heavy market.
It's only 15% consumer discretionary. Industrials represent twice that. So you got 30% industrials, 15% discretionary. So a lot of industrials, like Germany, you know, acting really well, right? So that strength that we've been seeing in industrials is really helping to carry this, because even the consumer discretionary names, it's not like these French discretionary names are doing that great. You know what I mean? They're doing fine. Like they're not crashing.
I was just saying how the top 3, and yeah, it was L'Oreal. So Hermes, LVMH, L'Oreal are all discretionary. Those are the top 3 largest companies in France.
No. You got Louis Vuitton, you got Schneider Electric, and then you got Total, and then Sanofi. So you know they're down the list. But yes, to your point,
your data is newer than mine.
Spencer Israel.
Whatever.
You know, you got to get wifey a push present. Don't be that guy that doesn't get your wife a push present.
Understood.
Don't be that guy.
Coming up
Right, ladies in the chat, chime in. You got to make sure you get your wife a push present. Hermes has some quality stuff. Look at Strazza. Strazza's like, come again? What's that?
Yeah, don't be a scumbag, Spencer. Be a good husband.
It's already taken care of.
You got it. Okay, good. Well done, sir.
Yeah.
Well done. Good.
So,
You shouldn't be getting the push present the day before she goes into labor either. So that's also well done, sir.
He's ahead of it. Look, guys, listen. There were drone attacks last night. There's a lot of hot talk out here.
Can you tell me when there's not drone attacks? Is there like I'd rather be notified? Hey, there was no drone attacks.
No, JC. There's always attacks, but there was a big one this weekend. There was like I guess the biggest one in a while.
And which continent?
Ukraine, the Ukraine-Russia thing. It was a big one.
I thought we were done with that.
No. So many drones. So little time. I do like this one from Secretary Bessent. The U.S. is never going to default. Love to hear it. People don't say that enough. China's holding back products essential to the industrial supply chain. Trump will talk to China's Xi very soon. It's from CBS interview, I think, last night. Trump expects a call with China's President Xi this week. So that's what we're up against this week. There's going to be a headline-driven market probably coming back a little bit, more like the one we saw in April and less like the one we lived through just now in May.
Also, watching steel stocks, those tariffs were announced on Friday. Was it Friday? I think it was Friday. So, yeah, they're raising tariffs. This was Friday night they announced this. So, if you're looking at Cleveland Cliffs up 25% this morning, you're looking at any other steel stock that I guess exports more than they import.
I like U.S. steel, and I don't think this one's done. I understand there's a $55 deal price out there, but the market seems to be suggesting that U.S. steel is going to get more than that. No?
No, it's at 53.5. That seems like a perfectly normal spread.
Well, it just ramped there.
Yeah, a week ago, right? I don't think that's a suggestion that
I do.
Okay,
I think we're going north of 55.
All right,
that deal's going down from more than 55 because what happens, Spencer, for these commodity deals is the spot prices change. And then the deal prices have to change.
And what about the communist regulators that don't let it happen? Is that part of it too, or no?
Well, this is a JC.
They're letting it go through. It was a U.S. thing. Biden was blocking it.
This is a very unusual circumstance where a foreign country is buying a major U.S. steel producer.
And how major is it? How major is it?
You can understand,
but like, is it a big deal or no?
It's a big deal.
You can understand why people would not be thrilled by that. I think you can, right?
It's Japan, not China, guys, to be clear.
It's kind of like
people talking about this like we're selling our steel company to China.
Yeah. Oh, so it's Japan.
Yeah.
You know, our military is in Japan, right?
I get it. I don't see a problem with it either.
If we want to take it back, like we got all our shit there. My little cousin's out there just crushing it.
JC,
Cubans do very well. Cubans condensed salsa do very well in Tokyo.
JC,
a lot more gets manufactured over in Asia near Japan than it does over here. So I think the deal makes a lot of sense.
Out of curiosity, do you know what CFIUS is? Do you know what that is?
I mean, I got a shot for that once when I was younger.
That's what I thought. It's the Committee for Foreign Investment in the U.S. So we have a special committee for this stuff. Is my point.
All right.
And,
I want to hear from everybody in the chat. How many people think the U.S. is going to default on its debt? I really want to hear. If you believe the U.S. is going to default on its debt one day, please put that in the chat. I need this information.
Isn't that why Bitcoin is going up?
Yes.
I don't know. It just kind of makes me sad.
All right. Should we bring on Brien Lundin?
Let's do it.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Lundin.
Good morning, JC. How are you?
I'm doing fantastic. I just want to thank you for dropping by our little get together a couple weeks ago. It was very nice of you. Appreciate that.
Well, I'm glad you enjoyed my hometown. If next time, give me.
Are we losing him? Did we lose Brien?
Oh.
Uh-oh.
We had him.
We lost Brien. The background looks great. I like how he's got like the dead animals on the wall.
Oh, wait, he's back. Brien, you back?
Yeah. Was that me or you? I'm going to say it was you.
Okay.
It's always Spencer's fault, Brian. That's how we
There
roll
you
around
go.
here.
There you go.
Whenever anything goes wrong, God damn it, Spencer, get your shit together, right?
Yeah, it was fun having you having you in my hometown the other day. If you give me a little bit more advance warning, I'd like to hang out with your group a bit longer. But that was fun.
It was all. I actually forgot you were down in New Orleans, and then it hit me. I was like, "Oh shit, we got to get Brian to come hang out, talk about gold." Man, New Orleans, what a great. I hadn't been to New Orleans since the Super Bowl where the Ravens and the Niners played, and there was a blackout. Remember that Super Bowl? What year was that? 13?
No, that was more recent than that, I believe.
14, maybe.
The blackout was interesting.
Yeah, you know what I really liked about that? Because I had a bunch of friends that were also in the Super Bowl, and I wanted to like go have some drinks at halftime, but like you only have so much time, and I wanted to see Beyonce like break it down, right? Because how can you not? So I didn't really have time to like meet up with some of my friends and have some drinks. So the fact that like whatever it was, 5-10 minutes into the third quarter, we got a second halftime to go hang out with some friends, like that worked out pretty well. I'm not gonna lie, that was kind of cool.
Yeah, it was interesting that panic did not break out in the Superdome when the lights went out.
The guy I was with bugged out. The guy I was with is like one of those nervous Nellies, dude. As soon as the lights went out, he was racing up the stairs up into the alley, like just gone, no questions, left me by myself.
Really?
He's one of those nervous Nellies, and he just freaked out. And he's like, "How are you not nervous?" I was like, "What's there to be nervous about? Let's go." My friend Nick is in the section over. Let's go hang out. I guess I'm a little more cool and collected than he was. But New Orleans, great town, Brian, great town. This is not a secret; everyone knows. So let's move on to precious metals, because guys, if you don't know who Brien Lundin is, I'm telling you right now, there's nobody on the planet who knows more gold investors, more CEOs in the gold mining space, more mining people in general than Brien Lundin. Do I have that right? Is that fair to say? You are the guy?
I would say don't stop now. You're on a roll. Okay. I'm blushing here. I would never say any of that by myself, but you're more than welcome to. I really appreciate it.
No, you brought some great context to the conversation. So what we did in New Orleans, for those of you who are unaware, Spencer, if you want to drop the link in the chat, we'll be in Toronto this coming September. We get together with a group of smart folks, share ideas. It's not so much a conference as it is a round table discussion, right? Brian, you saw that. You thought that was a pretty good format. You like that?
I love that format. It was like the TMZ of trading. The way you're standing up there and orchestrating everything, all the comments back and forth, and some really, really smart people. I really enjoyed that.
I hang out with enough dummies. So if we're going to go out of our way to hang out, you might as well bring in some smart folks, right? If you could throw up, Spencer, if you could throw up slide 2 there, just to give some folks some perspective here. We got gold making new all-time highs. You've got silver, pushing up against new decade highs. Looks like that's heading up towards 50 and then some. One of the things for me that I think about, I get asked all the time, GC, how high can gold go? How high can silver prices go? And my response, and I'd love to hear your thoughts on this, my response is that it's less about how high the prices can go up and more about how long they can go up for. Right? For me, it's more the duration over the amplitude. Like, how long can we be in this, secular bull market, in precious metals? And, I'll take the over, right? I'll take the over, regardless of what the over under is. I got the over. So what do you think, Brian?
Yeah, I hope you're right. I really do, because that'll give us a lot more time to make money off of this movement. For me, in particular, off the mining stocks, which are the way I kind of leverage these moves. But, yeah, the timing, both in when it's going to happen and how long it's going to happen for, that's always the tough part. If you look at those charts, you can see that gold already really completed its cup and handle formation. Now, year and a half, 2 years ago, we were all excited about that cup and handle formation, talking about how it projected to $3,000, $3,300, even $3,500. Well, we're here right now. So then we have to look at where we go from there. And again, how long it's going to take. If you look at silver, it has yet to break out on that cup and handle formation. So it's got a good ways to go. Like you say, once it clears, say 35, it should have a pretty open road to $50 or more, the old time nominal highs. And it can go much higher than that. So it's an exciting time and really uncharted territory for gold.
Can you explain to the folks what you mean by cup and handle formation?
Yeah, it's well, if you look at silver, you can see it's got that long basing period, that kind of cup, that rounding bottom, and then it trades sideways for a while, forming the handle for the cup, as it were. And then what you do is you take half of that distance, or you take that distance from bottom to the rim of the cup and project that higher, and that's what you should get for the upside potential where it's pointing to. And for gold, again, that was like $3,000, $3,300 range. Silver, it's somewhere over $50 at this point.
When we talk about the duration over amplitude in terms of, these trends historically last for a long time, so to me, that's front and center. Now, let's put that aside and actually talk prices. These things, you had gold prices down in the 200s and it was pushing 2000, right? You had like a 10x return in that cycle. I mean, even if we have a fraction of that this cycle, I mean, we're talking crazy prices. Crazy, like when you think about it in nominal terms, when you put things in perspective, it's really not that crazy. Throwing out numbers like $8,000, $10,000 gold, like that's not far-fetched at all. But people look at you like you're crazy. I kind of like that, Brien. No,
people look at those kinds of projections for years when people were talking about $10,000 gold. And now it looks not only achievable, but perhaps much more is achievable than that, depending on what happens geopolitically and with the financial system. But the way I look at it for gold, now that we're in uncharted territory and look at the upside potential, I look at the 3 previous bull markets in gold since 1971, when the dollar and gold that connection was severed. I count 3 bull markets: the early 70s, the late 70s, and the 2000s. And
I'm interested in how you're dividing those two markets in the early 70s and late 70s, and you're separating them versus having one secular bull. Can you tell me why you look at it differently like that?
Yeah, gold was trading for the official rate about $40 an ounce, and our organization, actually, my mentor Jim Blanchard, lobbied to get gold legalized again for U.S. citizens to own in the early 70s. And he started our newsletter, Gold Newsletter, in 1971 to help in that fight. He was successful in late 1974. And as it became obvious that U.S. investors were going to be able to invest in gold, foreign investors started driving the price up. Those damn French and everybody else were just running into gold, driving the price up, waiting for U.S. investors to come into the market. So they drove it up from about $40 to a little bit over $200. And then once the U.S. investors got in, then they just handed them the bag and dropped. And the price dropped until September of 1976. It bottomed at about $103, then started a recovery and maxed out at $850 in January of 1980. So I divide that because gold took a 50% haircut. I divide that as 2 separate bull markets, and people tend to look at the 1970s as one consistent bull market, which
I always did.
Yeah, it's very common. But if you look at it more conservatively and you look at it as 2 separate bull markets, then you come up with 3 bull markets where gold went up 5.6 times, 7.8 times, and 8.2 times from the low to the peak. And if you do that, then I mark the low in this cycle at about $1,040. So you're looking at $6,000 to $8,000, somewhere in that range, for the top of this cycle. Now, if you do count the 1970s as one long bull market, then you're talking about closer to 25x. And that gives you an even bigger potential number for this.
Silly numbers, just silly.
Silly numbers where people would call you crazy even today with gold at $3,400 for using those kinds of numbers. But it remains to be seen. I mean, if fiat currencies in general and the dollar specifically lose more and more credibility with every boom bust cycle, every crisis, every bubble that bursts, every time the Fed comes in and floods the markets with liquidity and new dollars, as more of those cycles come about, and maybe just one more cycle, fiat currencies in general are going to lose credibility. And the only way to really restore that credibility is to attach them to gold, to anchor them to gold. If you do that to back up the money supplies out there, you're talking about a minimum of, say, $10,000 gold to back up M2 by 20%. And you're talking about $60,000, $70,000 gold to back up M2 by 100%. So you can get to crazy numbers through that process.
You know, we were on the phone, you and I, probably, I don't know if it was earlier this year, maybe late last year. And, you know, one area where we very much agreed, and you were, it sounded like a little bit surprised that these words were coming out of my mouth, was the fact that for many years already, gold has already been making new all-time highs above the prior cycle highs in a lot of different currencies, all of them really. So in other words, every single currency in the world had already broken down to new all-time lows when priced in gold, which one could argue is the real money, right? Fiat versus real. And so all of these currencies, all of them, Aussie, CAD, Euro, British pounds, you name it, all of them, all-time lows priced in gold when looking at fiat relative to real gold. The only holdouts were Swissy and the US dollar. And last year, both Swissy and then shortly thereafter, the US dollar broke down to new all-time lows priced in gold, priced in real money. You know, for me, it was really just all the dominoes had fallen. Those were really the last two. So it seemed to be inevitable for those to break down also. And that's exactly what happened. You know, can you talk a little bit about that and whether it's, you know, a lot of people tell me it's the wrong way to think because the US dollar is the only currency that matters and and the US dollar is the reserve currency. So don't worry about gold price and those other currencies. You want to school these kids, Brien, and tell them how it is?
Yeah, you know, if you look to the gold bull market of the 2000s, that was a dollar only story. It was really the mirror image of what we saw this time. At that point in time, gold was rising in the dollar, but it wasn't rising in all the other currencies. So when you get across the board, including all the currencies and gold and the dollar, it's an important confirmation that something's afoot, something's different. My view is that the global financial system is really the issue, where central banks flood the markets with liquidity, create more currencies with every crisis, which of course they blow up the bubbles pop, then they have to do more in each crisis than they did before because the patient has grown tolerant of the drug, and so they have to do a bigger dose of a rescue effort to get the same effect. So I look at it as a fiat currency issue, not necessarily a dollar issue. You know, I have friends of mine like Peter Schiff and Brent Johnson, who are kind of at different side ends of the spectrum, with Peter saying that the dollar is going to be the first to fall, and it's going to happen this next cycle. And Brent really saying the dollar will be the last to fall, but it will fall eventually. And I think they're both very smart people, but I don't think anybody really knows. I just look at the trends of gold versus all of the fiat currencies, and you have to recognize the fact that they're all depreciating against gold. That's why it's really necessary. I mean, you talk trading, but there's really two reasons to invest in gold. One is investment, or to buy gold. One is investment, the other is insurance. And if you look ahead 3 to 5 years or whatever, and you can recognize that whatever your home currency is, it's going to buy an awful lot less. Its purchasing power is going to depreciate. And you know that gold is going to hold its purchasing power. So whatever of your assets you can park in gold, you're protecting the purchasing power of those funds and insuring against what you know is going to happen. So really, it's a two-pronged thing. There are two reasons to buy gold. Right now, I think both are valid. I think gold's going higher. It's making up for lost time, and it's a great investment as well as insurance.
Brien, I got to tell you, I talked to a lot of people, and if I didn't know any better, you sound a lot like a Bitcoin maxi. A lot of the words coming out of your mouth are very Bitcoin maximalist, expressions and comments. You want to throw up that chart there, Spencer, please? Talk to me. What's the difference?
Well, the difference, at bottom, the difference is 4,000 years of history.
Oh, is that all?
What's that?
Is that all?
No. I completely agree with the ideals of Bitcoin. Independence from government, individual sovereignty in terms of money, limited supply, transparency and anonymity. Not sure how both of those work, etc. But what's happened in recent years is that instead of pursuing those ideals, Bitcoin has sought to run under the regulatory umbrella of the global financial system. And the reason is because the more people you get to buy Bitcoin, the higher the price goes up. If you're a true Bitcoin maximalist, you don't really care what the price is because that's your home currency. That is your currency. And you only have to convert it every now and then for expenses or whatever, but you really don't watch the price that much. The vast majority of Bitcoin holders today watch the price, on a moment by moment basis, and are really concerned about making that price go up. So they're looking at it as a trade, as an investment, and not really, pursuing the original ideals of Bitcoin. So at this point, I look at it as a tech stock. I think there's a very good chance that it will end up with a use case in being the currency of the world or the money of the world. But I don't think anyone really knows at this point.
For me, the big difference here is that gold is a real asset with real market capitalization, with real investors, and Bitcoin is a rounding error, right? And the Bitcoin folks don't like it when I say that. I don't know what it is. Maybe they don't like math. I don't know. But Bitcoin's worth $2 trillion. Gold is worth more than 10 times that, right? So you've got over $22 trillion in value in gold, where real investors can actually participate. Real institutional investors can participate in that market versus Bitcoin. How much liquidity is out there really? How much can these institutions actually participate? So you have one with real market capitalization, which is gold, and then you have Bitcoin, which still is really just a rounding error. Bitcoin can go to zero tomorrow, and it won't matter to anyone who actually matters, right? What do you say about that?
Yeah, I think
a little harsh. Brien is a little harsh.
Well, no, I think a Bitcoin maxi will tell you, well, that's why it has all the potential in the world, because it will be making up that difference.
I don't disagree with that.
Yeah.
I don't disagree.
One of the advantages for gold and why gold is the perfect money, and part of this can be applied to Bitcoin as well, is the fact that gold is, at least in the physical world, it's the only element, the only commodity that you can multiply its price by 2, 3, 4, 5, even 10 times and not upset any industry in the world, because gold's uses are varied, but it doesn't take much gold to accomplish those uses. So in electronics, you can multiply the price of gold. You won't affect the end price of that unit much at all. In jewelry, they will switch to something else. They'll lower the carat weight. They'll raise prices. That's the only industry that will somewhat be affected, but they've gone through that before and they're already going through it now. So that's why gold's really the perfect money. It is more illiquid than Bitcoin, but that can be an advantage. That liquidity means if somebody's going to steal it, they have to physically steal it. They got to pick it up and move it.
True.
So, many would look at that as a disadvantage. I think there are ways to look at that as an advantage as well. So it has throughout history been the most useless metal known to man ever discovered because it's soft. If you make a spear point out of it, people are going to laugh at you and they're going to steal your spear point because it doesn't do much good. It's a soft metal. It looks great. It doesn't degrade in any way. Every attribute of gold has made it the perfect money throughout human history.
Let's talk about the companies, Brien. The dispersion amongst returns in the metal itself versus the companies that are in the business of that metal. I mean, wow. These things haven't done anything. Spencer, if you could throw up slide 4 here. This is the old school. Correct me if I'm wrong, Brien. I love you. You're a little more old school than I am. This is the old school measurement of gold mining stocks. Is there a better gauge, or is this the one?
No, that is the one. Now you can also look at GDX, which is the one most currently used by traders.
Less data though. This one goes back further.
Yeah, this goes back further. There's also the Gold Bugs Index, which is not a tradable index, but it does track gold mining companies that don't hedge or don't hedge.
The HUI, right?
The HUI, HUI. But this is the one that goes back decades and decades and decades, and you can see those swings. Now, these indices from their bottoms to their peaks will go up, say 4 to 5 times in a gold bull market cycle. And of course, if you're trading that on leverage, you can do much better. If you look at the juniors, the companies that are exploring and or developing projects, they do much better typically in the gold bull market of the 2000s. They would go up 2, 3, 4, 5, some 10 baggers, some 20 baggers.
Yeah.
And we recently had one in Gold Newsletter go up 80 times from when we recommended it to when it finally got bought out. And that was in a bear market. So these companies are, they're not for widows and orphans. They are the hair and fire, much more speculative end of the market. But there are ways to handle that risk. And if you can handle that risk, it's a really fun area to leverage the moves in the metals.
I remember I was super bullish. I used to be a gold bug, Brien, back in the old days. It was easy to be a gold bug in the 2000s. You said something funny in New Orleans. I was like, man, it was cool to be a gold bug in the 2000s. There were a lot of parties. Everybody was having a good time. And Brian's like out in the corner. He's like, I think I threw a few of those parties.
Yeah, I throw one every year, bull or bear market in here in New Orleans or in New Orleans.
Thanks for the invite. Appreciate that invite, Brien.
Yeah, please, everybody come. It is the gathering of, well, we cover everything. Macroeconomics, we have a great speaker list, incredible speaker list. All of my idols in the industry I bring in for it. But bull and bear markets, we have that big party. And I can tell you that in bear markets, it's pretty tough. But in bull markets, it's a whole lot of fun.
No question. I remember thinking I was so smart in the 2000s because we were long gold and the gold miners and we're making all this money, 40% returns and 70% returns. And I'm like, I am the man. And then I'm talking to Tommy Humphreys out in Vancouver, who I know you know.
Yeah.
And, old pal of mine, him and I had recently met at the time. And I'm like bragging about my returns in the gold space. I was like, oh, you're a gold guy. Let me tell you about how great of a gold guy I am. And then he's telling me about these junior miners out in Vancouver up 20x, 30x. And I felt like this big. I went from like feeling like I was the man to I totally did it wrong. What was I thinking? I know nothing, right? I mean, it was really eye-opening to see that if you really want those returns in the bull market, you got to go down the cap scale. But it's hard to do because for every 20, 30, 40 bagger, there's a handful of zeros, right? So, how do you think about that? Do you just buy a basket of the juniors? Is there like some insights that you can give us to how to find which juniors to get involved with? Is it silver, not gold? Like, where's the beta?
Yeah, there's a lot to it. And we have a report that goes into it on our website that's free and goes into all the details. But in a bear market, you'll have juniors that will lose 50, 60, 80% of their value if you don't, if you stick with them, all the way down. In a bull market, the rising tide lifts all boats. And that's why the 2000s was so much fun, because you would invest in these juniors and, the worst performers just didn't go up. They didn't do anything. Generally speaking, if you got in early, they at least doubled. And then your winners, and everybody can brag about their winners and talk about their 10, 20, 30 baggers. But what really made that bull market special was that your losers didn't drop in value. In a lot of those losers, your worst performers went up 100%. So that is tremendously helpful to your overall gains in a portfolio, just, from statistically. And right now we are in that kind of a market where the juniors are just starting to move. So there's plenty of time. Now, as far as picking the right companies, you have to invest some time, effort, and skull sweat and some money to do it, really. You need to go to the best conferences. You need to subscribe to the 5 or 6 really good newsletters out there, and take some time to research these companies. But the beauty of it is that it's an inefficient market. So if you put that kind of time in, you can find the big winners and avoid the losers. And again, that free report on our website has all of those details, has the best newsletters, not just mine, but the ones that are really good out there that are independent and not paid coverage, the best conferences to go to. If you're not willing to put in that kind of legwork to find the best companies, then you should just buy the indices, buy GDX, GDXJ, maybe try to leverage it and try and time it. But these companies can be life-changing if you get in the right companies early.
We have Brien Lundin here, guys. This is the gold guy. So you're very generous with your time, and we certainly appreciate that. But I'd be remiss if I didn't flip the script and take it to the other side. We're talking junior gold miners, junior silver miners, high beta names, looking for those 10, 20, 30 baggers. But I'm a big believer in market bellwethers, talking about JP Morgan and Goldman Sachs when looking at financials, things like Exxon and Chevron when talking energy, Caterpillar, Honeywell, GE when talking industrials. When we're looking at gold miners, Newmont is, that's the bellwether as far as I'm concerned. I'd love for you to tell me I'm wrong here. But when I see a bellwether like this thing hasn't done anything in 40 years. I mean, this is one of the biggest bases on the planet. If there isn't a bigger base, I mean, this base goes back further than the Nikkei, right? I mean, this is on another level. Can you pick apart my thesis here? Is Newmont not the bellwether? Am I looking at it wrong?
No, I would say Newmont is. There are better producers, like Nico Eagle is I think the cream of the crop as far as miners, but it's moved an awful lot right now. It's important to note that that's a log chart. So just to get back to the 2020 highs, it's going to double from here. Barrick Gold used to be another one of the bellwethers, but Mark Bristow has been moving more toward copper, or at least adding that to the mix. He was a longtime gold bug, and now he's a copper and gold bug. Even gave up the GOLD trading symbol for some reason.
I was going to say Barrick is just B now, right?
Yeah, yeah.
I kind of like it. I kind of like the single digit. I'm not gonna lie. Is that a
I can't
sentiment
wait to see
indicator there
who.
or what?
I can't wait to see who's going to grab that trading symbol, though, or whenever it becomes available.
Probably an ETF. Let's be serious.
Yeah, you're right. Um, so yeah, but Barrick still is a big gold producer, and the reason why there was a delayed start in the miners in this bull market is because this bull market was started by central banks. It essentially started in 2022 when Russia invaded Ukraine, and the U.S. and its allies came up all these sanctions, and countries realized how easy it was for the U.S. to really put the screws to them through dollar weaponization, and central banks started buying gold to insulate them from that effect. It really accelerated last year, especially from China, and that really launched the gold bull market. Not Western investing, but more central bank sovereign investing and Asian buying. Those buyers don't buy mining stocks. Central banks don't buy mining stocks, and they don't buy silver. That's why those two sectors that have typically leveraged gold really hung back. And now they are really the only way for Western investors to get involved in this new bull market without buying gold, which has already moved so much. So that's where we're seeing the money starting to come in, and the mining stocks are just beginning to respond. It really is the best of all worlds, the best you could hope for. Gold has already soared to new records, is going higher, but the mining stocks and silver are still near longer term lows. So you can get tremendous leverage now because the hard part's really been done, getting the gold price up. And, it's an extraordinary opportunity in my mind.
Brian, there's a lot of we'll leave it here, but there's a lot of folks out there who've never seen a gold bull market. They've never seen it. They hear about it, right? It's like this thing that may have happened before they started trading, and they studied the history, but they haven't lived it. They haven't seen it. Any advice you want to give to these kinds of folks, Strazza? Any advice that you want to give to these kinds of folks who've never seen this before?
Yeah, it creates different problems and different issues. And this will sound a bit cocky, I guess, but in the 2000s, the big issue, well, actually, this would have been more in the mid 90s. We had a little bit of a bull market, and I paid some awfully high tuition by not taking money off of the table. And what happens in these kinds of bull markets, when even your losers are winners, is that you have tremendous paper gains. And of course, you may sell a stock and get that cash in your brokerage account and think that you've cashed out, but then you hear another little story or something else and you put that money right back in the market. It really takes discipline. And as traders, you need that kind of discipline. But a lot of investors in this sector get enamored by the romance of the stories. They fall in love with the stories and they stay too long. They don't take money off the table. And when I say taking money off the table, because the gains can be that great, you need to take it out of the market on occasion, and you need to take some gains out of your brokerage account and put it in something illiquid, whether it's real estate, whether it's gold, whatever. Put it in something that's a bit more illiquid so you don't just throw it right back in the market, and dip a ladle into that flow of capital gains and take some money out here and there. It really is an issue. And I think we're getting to that kind of a market again.
Brien Lundin, GDX, as we speak, making new 13-year highs, sitting right now, last traded just under 53. Back in 2011, when gold peaked and these things completely fell apart, that was up near 67, so still another 15 points. Check my math. That's about 30% of upside here from the GDX just to get back to the prior cycle highs, making new decade highs this morning. Is it just a coincidence that we have Brien Lundin on our show as GDX is breaking out to new decade highs? I don't think so. I don't think that's just a coincidence. I think we are making gold magic here together, Brien. We're really doing it, Harry.
That's how smart you are to have me on. You knew it was coming. And you know, it really in my newsletter, June newsletter just went out. I noted that gold was coiling and the Bollinger Bands were pinching, and it was getting ready for a new rally.
Do you guys hear this technician over here talking about Bollinger Bands and the pinching? And I mean, you guys hear this? I'm not you guys paying attention, right? This is the real deal.
Yeah,
I love it, Brian. Give me more.
It's because this bull market really is unprecedented. It's like none that we've seen before. It hasn't had the typical declines or corrections because central banks have been driving it, and they buy, per geopolitical strategy and not through emotional swings like investors typically do. So every decrease in volatility, every so-called correction in gold during this bull market has been more of a pause in the rally, except for the post-presidential election price drop. Other than that, everyone has just been a mere pause, and you've seen volatility drop as the market kind of built up its energy for a next leg higher. And one of the things I noted last week is that any headline at this point could drive gold much higher very quickly, because it was coming to the culmination of one of those pauses. It was coiling and ready to make the next run. Of course, we got those headlines last night with the Ukraine attack into Russia, and I don't like geopolitical drivers for gold, but it did light a spark, and I think has sparked a new rally that's very likely to take it over 3,500 on this run.
I know I keep saying last question, but I have to ask you this. You study cycles and you see gold move first, and then you see copper coming right after that. And then that third bad boy is energy. And we haven't seen that energy move yet, but you saw step one in gold. You saw step two in copper. Is energy going to go? Because it's ripping too this morning.
Yeah, I think, energy is more of a supply issue than demand. Demand's always there and gradually rising with its little interim peaks and valleys, but it's more of a supply issue. And the OPEC announcement really drove energy again, or this time in this latest little surge. But it's also for copper, it's both supply and demand. Supplies are constrained, takes many years to bring a copper mine on, and demand is surging. For gold, it's more demand than anything at the margins, monetary demand in particular, that drives gold. So each market has its vagaries that need to be watched. But yeah, generally speaking, I think if you really pull back, we're entering an era of commodities and less the financials, which drove the last 15 years or so.
Ladies and gentlemen, Brien Lundin, very creative with his website, goldnewsletter.com. Very creative.
How long ago did you get that
you
one?
did there.
When you're in the market and in the business as long as I've been, you get to grab these domains right off the bat. So yeah,
when they invented domains, they called them, and then they said, Brian, which one would you like? That's what they said, right? They used a telephone. It was wild, right?
Yeah, we grabbed it.
All right. Anyway, the link to that, as well as Brian's Twitter, are in the description of this video on YouTube. I also put the link in chat as well. Brian, thank you so much for the time.
Appreciate you. Love it.
Lots of fun, guys. Anytime.
I'll see you in New Orleans soon, I hope.
You give me a call.
All right. Adios. What a great town, New Orleans.
He just gave us 40 minutes of his time. You kept just blabbering with him, and
I'm super annoying. But we have Brien Lundin on, so I'm gonna take advantage until he says, I gotta go, guys. You guys are annoying, right? I'm just gonna, we have Brien Lundin. If I'm not peppering him with questions, and by the way, these are questions, it's not like I crowdsource the chat or our audience to see what I should ask him. These are all legitimate things that I want to know the answers to as an investor. So I hope those of you listening at home found value in that. I know I certainly did. I could have gone on forever.
I know. Wait, I just want to bring on Jason for a second. Jason, you're here?
I am here. What's up?
Yes.
Come on, man.
Right,
Dude,
yeah.
that was great. That was great. I'm glad you kept him on, honestly. Like, that was just phenomenal. I watched, just watching him at the Portfolio Accelerator here. He just has so much good knowledge about the gold industry. I love the back and forth.
Yeah, he's a no bullshit guy, and he talks to everybody. So, like, I'm not talking to all those people in the mining space. I mean, I talk to other kinds of people. But and I would encourage people to use me for the people that I talk to, right? Like, use me as that intermediary between a whole lot of portfolio managers and technical analysts around the world that are just drinking buddies of mine. He's the same thing, but in his world, and I don't get to talk to those people. So it's really fascinating.
Jason, anything he said jump out to you? You disagree with?
No, nothing. Actually, I disagree with nothing he said. I do think that,
Nothing?
Yeah, nothing. Because what we're talking about here is we're in uptrends, right? Like, if we were in a downtrend, maybe there'd be something there, but like, we're in uptrends. The GDX hitting, new highs and saying ways to play this. I think he's completely right. Something we all talk about in the gold industry, and this is just old school stuff, is if you don't understand it very well and you want to buy a bunch of juniors, go to the ETFs. Do that. Like, that's very smart. At the gold rush, though, like, if you want to be involved in the actual individual trades, like, we do the research, we find those for you. We have a ton of great winners, 2x, 3x, 4x winners this year already. So, you guys want to find the individual mining names, come over to the gold rush, you're going to find them.
QR code on screen, link in description. I'll pin it to the top as well. And then Jason, today's Monday. You're doing your weekly video for members, right? Every Monday.
Monday, yep. So
you better start with that GDX chart hitting new decade highs, bro.
Oh man, 13-year highs. That's beautiful. And like you said, back in the day, like when you were gold bug, it was amazing. Like, it was, everybody was into it. It was fun. And now it's kind of back. We're in an uptrend. But what I like about it is that nobody's celebrating. It's not really every normal investor is in gold now. I love it, because that means there's some pessimism still. That means there's still probably room to the upside. I don't know if this event will take us to where we want to go, but I'm just saying it's in a structural uptrend. I'm not going to bet against the thing. I'm going to stay long it and see where it goes.
Yeah, nobody seems to care that gold's making all-time highs, which is fascinating, right?
I love it. Mm-hmm. So we got a couple charts too, if you guys want to bring them up.
Yeah. Let's play through there real fast, and then we'll do some reassess, and then we'll hop out. Well, yeah. What's thought are we on?
Let me see. 7.
Okay.
No. 14.
You're on the wrong deck, my man.
Oh, yep, I am.
14.
More intro deck.
Here we go.
All right. So yeah, we're just looking at this as we were talking about big global macro, and you were talking about this with Brien as well. So, if we're looking at this in a global macro sense, when's the point when gold does very well? And it's when the dollar kind of falls. And so this is a long-term chart. This is something I've been doing some research on. Somebody said, hey, it was April and bonds were down. And this is a chart of yield, so it's to the upside. So inverse it for bonds. The dollar was down and stocks were down in April. And that hadn't happened in the last 10 years, he said. So I continue to go back further and further and further. And, the setup we have year to date this year hasn't happened since 1982. So that's how long ago it's been since the dollar's been falling, stocks have been falling, and bonds prices have also been falling as well, meaning yields to the upside. So I'm just saying here for gold, like, that's always a good environment for gold. For international stocks, it's a great environment for international stocks. For commodities in general, it's usually a good environment. Commodities are very cyclical. We had the hype that people don't understand commodities very well. So let me give everybody an illustration. If you go back to the 70s, and this is a great one to look at. If you want to be a student of charts, go back to the 70s, look at all the commodities. Sugar goes up, I think 8x at one point. It falls all the way back to even, by the end of the year. And then it jumps up another 6x. These are how commodity cycles work. Like, you're not going to have oil just hit $130 and just sit there around 100 and then bounce right back up. They're going to die for a little while, and it's going to be a long time at times. But if you look at it, the way the cycle usually works is gold usually starts to take off, And the next thing you know, you see the rest of the commodities start to take off. We've already seen copper. Copper's moving really nicely this morning. I'm sure it's going to take it back to highs again pretty soon. And then the thing that we really need to see here is oil. And oil's making a move this morning. Could just be geopolitical. Not ready to make a call that oil's in a massive uptrend again, but I think it's the one to start looking at. And JC, like you were talking about earlier, you're looking at the bellwethers. When you're looking at the bellwethers and these things are going to start to move, like that's when you're going to start to see that sector really start to move. So I think we're still in a nice commodity cycle. I just think that people are getting to, hey, you know, gold's moving. Why isn't this moving? It's just the way it works. One at a time. Be ready to take the trades as they come. There's a lot of money to still be made in the market right now.
No arguments here.
Cool.
That's boring.
Sorry. You had nothing bad to say about Brien Lundin, and here I am, and I got nothing to disagree with you, and now you're like, oh, I was bored. So now I'm the boring one.
No, I mean, but once again, it's like when we're talking, it's like we're in an uptrend. You know, if we're in an uptrend, we should be agreeing on certain things, and when we're in a downtrend, you know, we should be agreeing on that point. Like that's how good technicians work. And especially somebody like Brien, you know, he's been in the industry a long time. He knows the way that industry works well. He's very good at it. He talks to a lot of people just like you. You know, that's the big thing about you is that you have that big network. And so does he. So just getting that understanding where we're at, that's why we do what we do. That's why we're good at what we do.
All right. I'm going to do some recess and we'll get out of here.
Do it. Just want to give a big shout out to Avalon, New Jersey. What a great town. What a great town. You know, I was talking to my wife, you know, we're looking at houses out in the Poconos. We've been looking at houses on the beach. You know, I was kind of leaning towards the Poconos more because you could use it all year round. You know, I was here. I hadn't been here in Avalon since I hadn't been here like 3-4 months. We were just riding around in the golf cart this weekend, and I looked at my wife and I go, I really like it here. We really need a house here. And she goes, I told you. I've been telling you the whole time. So you know how much your wives like to be told that they were right. I was the husband this weekend telling his wife that she was right. She was right all along. And her response was, I'm always right. And I just left it there. So,
and your response should have been, "You're right.
You're right. You're right again.
That's right.
You're always right."
That's right. All right. My recess was shout out to a movie that we just rewatched it recently. I hadn't seen this since I was a kid. RoboCop, which holy cow, I did not remember how obscenely violent that movie is. It was too violent for me almost. How did I watch that as a child? I don't know how I didn't have nightmares for days. That movie is so violent, but good movie. It holds up. It really does. Honestly, RoboCop. Shout out.
Dude, all of us watched like the craziest stuff when we were kids. Like, I mean, you know, Big Trouble in Little China, RoboCop, like Terminator, like Rambo, like over.
I remember
and over.
watching Friday. I didn't even know what weed was. Watching Friday.
Yeah, same.
Violence,
just all these massive. If you go back like and watch them, like it's just like, damn, wow. I was watching that when I was like 8.
I know how was I allowed to watch this as a 12-year-old? I can't believe it.
That's right.
Anyway, okay, so that's what we got going on today. Jason's doing his video for members of
wait,
AAC
I got one. I got one, Spencer.
Sorry, Jason, go ahead.
Okay, so real fast. So, When to Sell. Reread this book again. JC, I'm sure you've read this. Justin Mammis. When to
I
Sell
have not
book.
Actually. That's one of the ones I have not read yet.
This is a great one.
Okay.
And so I reread this recently. And so if you guys have never checked it out, definitely check it out. I think what's really cool about it, it really kind of illustrates what's the difference between a great trader and a bad trader. So a great trader, or just good trader, generally like they get more psyched on the position and less pessimistic on the position as you're going in the right direction. When you're in an uptrend, you're making money on the position. You're like, this position's working. It's great. What happens to bad traders is when the position is going the other direction, it's going against them, then they get more optimistic and they're going, oh man, this is going to work, you know, forever. And really good traders just get out of the position. They're immediately pessimistic. So anyways, great book. You guys all want to know when to sell. Like everybody likes to know when to buy. That's the first thing. That's why he named the book When to Sell. So look at When to Sell, figure it out. Great book.
Jason,
one of my favorites.
How old is that book, out of curiosity?
How old is it?
Yeah.
God, it's got to be early 90s.
Okay, just wondering.
Yeah.
I've honestly I've never heard of that book.
It's a good
Just
one.
now.
It's a
right.
great one. It's a classic for sure.
Okay, cool. All right, we got Chart Request
Chapter of
Live.
The Neurotic Investor.
Chart Request Live at 1 o'clock today. Send your request to questions@stockmarketmedia.com. And we'll be back tomorrow morning with Todd Sohn. That is the plan. Thank you
Nice.
for watching. Drop us a like and check out all the links in the description for all the free research. Get Jason's work at the Gold Rush. And we'll see you guys tomorrow. All right. Go make some money.
Adios. YOLO responsibly.
And break out.
Run it. I can't take no loss. I don't even know what it